If you're trying to figure out whether Chattanooga is heading for a housing market crash, you're in the right place. There's been a lot of noise out there. Prices dropping in Austin, panic headlines out of Florida, and interest rates still sitting higher than a lot of us had gotten used to. But how much of that applies here in Southeast Tennessee? I'm Chris Roberts, a relocation specialist in Chattanooga and Cleveland, Tennessee, and in this video, we're going deep. We're comparing Chattanooga's market to major metros like Dallas and Austin, looking at what's happening in Florida, and breaking down why our local market is still showing serious signs of stability. I'll even share how baby boomer trends and owner equity are shaping what's likely to happen next. So stick around, let's unpack it all. And click that link below to schedule a Zoom call with me to learn even more about how I can help on your journey. Let's start with what's going on right here at home. Chattanooga's real estate market has definitely cooled compared to the pandemic years, but that doesn't mean that it's crashing. The median sales price is right about $394,000, which is slightly lower than the $397,000 that it was in June of 2024. The median days on market has risen to about 19 days, which is up 73% from the year before, but it is still far from slow. Inventory is sitting around 3,000 active listings in the broader metro area, which is neither alarmingly high nor worryingly low. It's stable, and in fact, it's the same as where we were pre-pandemic. Chattanooga's market gets a moderate competition score from Redfin at around 46 out of 100, and that means that homes still get multiple offers, but buyers are seeing some more breathing room. Now here's the big difference between now and 2008. Homeowner equity is strong. Nationally, over 38% of homeowners own their home free and clear. And in Chattanooga, where our home values have historically been more affordable, that number could be even higher. When people have equity, they don't panic sell. They're not forced to list their home just because the rates have gone up. Now let's talk about markets that are seeing real price declines, like Austin and Dallas. In Austin, prices have declined anywhere from 2 to 6% year over year. Inventory has jumped significantly. Since 2010, Austin's housing inventory has increased by 57%. Builders flooded the market during the pandemic, and now there's more supply than there is demand. And in Dallas, we're seeing a similar trend. More listings, more price cuts, and longer times on market. Dallas saw a huge influx of new construction, and when demand cooled post-pandemic, the excess inventory began pushing prices downward. And here's the key: Chattanooga never saw that level of overbuilding. During the pandemic, our construction activity increased slightly, but not nearly at the scale of major Texas metros. We maintained a relatively balanced supply compared to the demand, and that is why our inventory levels today, which is around 3,000 homes, feels stable rather than bloated. And while Dallas and Austin are correcting after overshooting during that boom, Chattanooga simply doesn't have the same exposure. And Florida is another story. In places like Tampa and Punta Gorda, median home prices are down between 2 and 11%, depending on the area. Condo-heavy markets like Northport and Sarasota are seeing the steepest drops, and here's why. Overbuilding. Florida saw a massive wave of new construction. Builders responded to demand by adding tens of thousands of units. Migration slowed down. During the pandemic, people were flocking to Florida, but that trend, it's cooled. Net domestic migration into Florida has dropped by over 75%. By comparison, Chattanooga is still seeing steady in-migration. People are continuing to relocate from larger, more expensive markets, especially Atlanta, California, and Florida itself. We didn't see the same pandemic spike, and we're not experiencing the same post-pandemic slowdown. Instead, our growth has been more consistent and sustainable. Another reason is skyrocketing insurance costs. Insurance premiums in Florida are up 45 to 400% in some areas, especially after recent hurricane seasons and the condo safety inspection requirements following the Surfside tragedy. And climate risk. The rising concern over flood zones, hurricanes, and extreme weather is really starting to weigh on buyer confidence down there. All of these are putting downward pressure on prices, but here's the thing: most homeowners in Florida, they still have a lot of equity. So while it's a correction, it's not a crash in the traditional sense. And here in Chattanooga, home insurance is still relatively affordable, and climate risks like hurricanes and flooding are far less of a concern. That makes our market much more attractive and more resilient. Now, let's talk about the boomer effect. A big trend that we're seeing across the country, including right here in Chattanooga and Cleveland, is baby boomers downsizing. But unlike millennials and Gen Z who often need financing, boomers are showing up with cash in hand. They're selling their larger homes, often mortgage-free, and buying smaller homes or townhouses outright. And that is creating two outcomes. One, more competition in the mid-range market, where homes priced between $250,000 and $400,000 are still moving fast. And second, larger homes priced above $600,000, they may sit longer unless they're priced competitively or fully updated. But again, these sellers aren't panicking. They aren't leveraged, and they have the flexibility to wait for the right buyer. Okay, so what could change this picture? Let's talk about some legitimate risks. Unemployment, a major loss of jobs, could totally soften demand. But Chattanooga's employment base, especially in healthcare, manufacturing, and logistics, that has stayed stable. Investor sell-offs, like if institutional investors own a large number of homes and decide to liquidate, that could flood the market. But investor activity in our area really has remained fairly modest, especially given that we don't have nearly the amount of institutional investors as markets like Atlanta and Nashville. Now, rate pressures. The rising mortgage rates could suppress demand, but many buyers are adapting to that just by adjusting their price range, because refinancing is still an option later on. And overbuilding. We're simply not seeing this in Chattanooga. There are new homes, but they're not outpacing our population growth. So while every market has vulnerabilities, we're just not seeing the ingredients of a collapse. Now, what does that mean for buyers and sellers? For buyers, you've just got more options now, a little more negotiating power, and less pressure. Interest rates are higher, yes, but we're not likely to see 2 or 3% again. And if the home fits your needs and the payment is manageable, it still makes sense. For sellers, you need to price right. The days of listing high and letting the market catch up, those are gone. Homes that are clean, updated, and appropriately priced are still moving quickly, especially in the under $400,000 range. And if you're thinking about downsizing, you may be able to sell high and buy in cash, just like many boomers are doing. So is a housing market crash coming to Chattanooga? Not likely. We've got strong equity, a steady economy, and a more balanced housing supply than the markets that are seeing real declines. Will we likely see some sort of softening? Sure, especially in the higher price points. But a crash? That's not what the data is pointing to. Click the link below when you want to talk through your options, whether buying, selling, or even just waiting it out. I am always happy to help you live your best life in Chattanooga and Cleveland, Tennessee.